Okay, welcome to the Swing Trading with Cycles channel. We're going to do an update on precious metals, but really focus on GDX, the miners. Relatively short video. This is looking strong, and it's funny, you haven't really been able to say that about miners very often. Let's start with the daily chart. This is GDX we'll focus on. So we had this period of just middling, just kind of like bouncing back and forth, chopping around, but not making lower lows, importantly, right? This was your low. I'll take these crosshairs off. This was a low, and then we held above that. And then we held above this one, right? Like buyers stepping in where they needed to, right? And then we started this little uptrend. And what is the percent increase for that? So let's say from this point, right? Like to this top on day 10, that's, something like a 22% increase, okay? So that's nice. And that's not from this low, that's from this low, right? This higher low. And so, there are a lot of lines on this. Let me get rid of some of these. Some of these are gaps. So we had this. So in terms of where we are in the cycle, this would seem like it was day 27 of this kind of longer cycle, which actually topped out on day 6. So, we can actually, these are just kind of mile markers along the way. So you can kind of think of this as one big, ugly, bearish cycle. So we have a nice little rally, but it tops out on day 6. And then we decline. We almost give it all back, but not quite. We try to rally, can't get back to that high. We dump, but don't make a new low. We just can't get back to this low here. And now we've rallied, and importantly, we've made a high above this high, this last daily cycle high, day 6. And this is just to sort of simplify what's happening, right? Like what we're saying is there was a 6-day rally, and then we essentially had a 21-day period of chop, right? Where we didn't make a new low, so we didn't give back the whole rally, but we gave back most of it, and we didn't kind of stayed near the lows. So this rally here, this 22% rally, has now held a higher low right here. I mean, I hope you can see that. I'll draw that just so that that's pretty clear, right? So you have this chopping around, right? Like, which no one likes, and then boom, and now like that, right? So that's what we're focused on here, that we expect this to make a high above here, right? So that gives you your near-term target above 28.49, right? Is that the high for this? Yeah, right. So, and that was day 10, and this is day 15 now. And so the other thing to notice is a character change, right? This daily cycle topped out on day 6. This one topped out on day 12, and this was a pretty feeble rally. And so if we're going to make a new high, maybe it doesn't even happen today, maybe it happens tomorrow, so it's day 16, you start to think about how these things unfold, and we'll look at the weekly chart, which is more important. But that tells you then that this is now a daily cycle that is rallying for more time than we've had in these last bearish ones where, we're lucky to get a 15-day rally, right? And so this is going to get interesting. Now we don't know we don't know where it's going to top. That's going to be interesting. But it does look like we have clear air on the weekly chart. Let's move over to that, and I'll delete this just so you can see kind of like the progression. And of course, it won't happen in a straight line. We expect as we go up, we probably come back and back test this, right? And then, we move in this stair-step fashion. But for that to happen, we're going to need cooperation from the weekly chart, right? And so on the weekly level, you can see this weekly cycle started out really, really iffy, right? Because we had this big, powerful green candle on week 35. That was September 26th. And then it was followed by this candle that was just like, oh my God. Like, it looked like we were going directly to new lows. It's kind of like what we're looking at on the daily chart, right? In some ways. This is obviously scaled up. It's the weekly. And so, but instead of making a new low below this low that following week, we did get red. It was follow through. And this, to be very clear, was a swing high. I'll just put this line here so that's very clear, right? But we didn't get follow through after this week. Instead, that following week, we got a green candle. Didn't make a new high. So this was an inside candle. But so technically didn't make a new high or a new low, but clearly moving in the right direction because it was green. The colors always matters. If that's a general question, yes, the color of the candle definitely always matters, right? A green candle means it's going higher. A red candle means it's going lower. That's important. Hammers definitely are a little bit of a Like, that's a nuance. Obviously, a green hammer is better than a red hammer, though. And so we then have these weeks where, this week this is another week where we kind of tested that low again, right? That was a scary week. At one point, this was red. This was deep red. We know that, right? That's because of the way candles form. And then we get this big, powerful move the week of November 7th. And then we've consolidated since then, right? And that was week 6. Last week was week 7. I always talk about the idea of consolidating at the upper end of the range. Another way of thinking about that is it's a bull flag. It usually looks like a bull flag when you zoom into a lower time frame. And then this week, we are now getting a bullish outside week, aren't we? 2676, yeah. So we went slightly below the low of last week, and now we're rocketing through. And so we would expect that we make a bullish weekly outside candle above 28.49, right? So like if price can get above 28.49, we'll make a new high above this, making this candle like basically we took out the low of this candle and we took out the high. And it's green, so it's bullish, right? And of course, tomorrow is actually the last trading day of the week. So it's going to be important to see how we close there, because that sets us up, right? You always want to think about what does that set us up for. And if we close near the highs, and this is week 8, that sets us up for a candle, something like that, right? Next week, on week 9, week 10, week 11, maybe a pullback, week 12. Because if we look back, even this cycle actually rallied for 12 weeks, right? This was the cycle that started at the beginning of this year, actually, like towards the end of January. Right, so that cycle actually rallied for 12 weeks. That was your weekly cycle. And, you could call that like a 42% rally, right? So even in this ugly, disgusting bear market, you still had a 42% weekly cycle rally. That's obviously a pretty nice return, right? And that's it. That's if you just bought the stock itself as opposed to playing calls or something like that, right? The other thing to note is that this yellow line is your 200-week moving average. So totally not surprising if we would see that we at least get closer to it. Now it's a moving target. It's kind of flat now, but it's probably going to start heading lower soon, given how long we've been declining. And so that's going to be an important point to kind of sort of be watching for over the next couple of weeks, going into early December, which will actually coincide with the Fed meeting. So that's going to be really interesting. There's going to be all the reason in the world for it to possibly reverse. And so we're going to look out for that. And if we look at the monthly chart, man, this thing is just looking bullish, right? We had this heavy decline, which is why we have this heavy decline followed by a furious rally, which is why we have this lower wick. And I mean, this is just a big green monthly candle. And if you think about, just what we have before us, we've got one more day of trading tomorrow, right? And then we come in the next week and we have 3 days left of trading. So you've got 4 trading days left, more or less. So it's unlikely this candle is going to look much different when it closes. That's a good thing to kind of keep in mind, like how close we are to the close. And so that sets us up for some bullishness, right? Like the same way we talked about the weekly candle, you think about the way the December candle could start to shape up. Like if we close near the highs, then it creates more likelihood that we start to get some distance, and start making higher highs, right? So that's exciting. The other thing that I would say is really exciting actually is that GDX is finally outperforming. The miners are finally outperforming the SPX, right? That's really exciting. So if we look at an annual chart for, we'll take all of the drawings off. If you took an annual chart of the GDX, so that's going back to 2006, and you look at an annual chart of GDX divided by SPX, so you're looking at how one is moving against the other, a ratio chart, and you can see for the ratio chart on the right, for that period of 2006 up to 2011, GDX was actually rising versus the SPX, so it was outperforming. It would have been better to have your money in GDX theoretically, and you can see in absolute terms it was rising. That makes sense, right? It was outperforming the S&P though. I mean, this was a very ugly year, obviously, 2008 global financial crisis. Now, so we had this swing high in 2011, which we've never recovered from, right? We still haven't recovered from, right? We're still well below that swing high. That's a swing high below 49.22. I mean, think about that. That's a swing high all the way up at 49.22, and that's from 2011. So we've been below that for a long time. And in the 2020 COVID spike, we got all the way up to 45.78. Well, that's interesting, right? Right. So we got all the way up to 45.78. Yeah, let me just add the drawings back because that is important. So, right. So we didn't even get back to that level, right? So you have that kind of gap. So that's going to be interesting. When we finally do get a sustained move up, it'll be interesting to see the sort of move between, call it 46 and 49, $50. That could be interesting. And that's important because this is a very pivotal, this is the swing high that caused this whole decline, right? And if you think about it in that context, and that's why when you look at a big picture chart like this, I think it really simplifies things. And it's shocking to me. It's surprising to me, I guess I should say, how people can be so bullish about a chart that is so bearish. And I realize things can completely change. You can get a different candle that looks different, like crazy, but this thing rose. It had a nice uptrend since 2006. It topped out in 2011 and then made a lower low, right? Much lower than this low even, which was pretty crazy from the global financial crisis. And since then, we've been rallying, which is great, right? This is an uptrend, no doubt about that. But the problem is we topped out in 2020, and now we have 2 green or red years, and we'll talk about the specifics of those years. But this is, and maybe I will get rid of these lines now. Like what this is setting up is that this is another swing high, right? Like think about that. Swing highs are how downtrends begin, right? Like, and this, my ginormous downtrend. Like, I mean, look at this big move down in 2013. But I mean, this downtrend started after this swing high. Like, that's literally how it works. And so this has the potential. Now, that would literally mean price would need to fall below the COVID low, which is, that's the one thing that you kind of have going for you, that you would think that that's a significant low, that at the very least we get a strong bounce, and maybe not exactly at that level to the tick, but right around it, maybe even slightly above it, right? But that's not a good look big picture, because this is just another lower high. Like if you just think about how this gets filled out, and more importantly, like just tactically speaking, the next year's candle is going to be an inside candle, right? And it's setting up to open. It's setting up to open like, probably more like here, right? And so it's going to be interesting to see, are we getting a sustained move higher, or are we actually going to be drifting lower here? Now, if we look at the chart versus the S&P though, we actually are green on the year. So this is the ratio chart versus the S&P, and you can see this same rise and the same swing high in 2011. In a lot of ways, the chart looks very identical. What is different though is that while we've been rallying and I'll just pull that chart back up, right? While we've been rallying since, call it 2016, like in absolute terms, since 2016 for the S&P, we've just been chopping around, right? The GDX versus the S&P, that is. So having your money in S&P really, like, that would have made more sense. Like, and really, all of this price action has basically been inside the range of 2016. Now, this is a ratio chart, so it's more complex than that. Like, it's not telling you what the absolute prices were, but the point is, this is kind of dead money, right? And we're at the bottom end of that range. So that's the thing that's also kind of promising, that even if this isn't going to be a sustained move up, this is telling you that maybe we're going to have a little bit of a slingshot to the upper end of this range again, for the S&P, for the GDX to S&P ratio. So that's another kind of tailwind, wind at your back. But the absolute charts, like on the monthly time frame, are bullish. This yearly is not looking so great because of the prospect of an inside year next year, which is just going to happen. 2023 will open as an inside year. There's no way it's not going to. I mean, yeah, there's no way it's not going to, because we would have to take out one of the highs. Like either the high or one of the highs or one of the lows, which is not likely to happen in the next month, right? And so, but as long as we continue to see bullish signs, and let's actually look at the quarterly chart for both of those together, the two panel. So the quarterly chart, let's get rid of this candle projection. We are just about making a quarterly swing low, so we need to stay above 28.37. So we're not quite there yet, but above 28.37 gives us a quarterly swing low on GDX. And it, like, I mean, this is aspirational, but, you know, like the next major, you know, swing high is at $41. Now we probably don't get there. That's where the monthly is helpful, or excuse me, like, yeah, if you like zoom into the monthly, for instance, that's helpful because that tells you once you get past this cluster of like resistance, you're probably going to come and try to test this area, right? So like 33 maybe. And that sets up a nice risk reward, right? That's about $5 from here. And your stop would be somewhere in the $27 range based on lower time frame evidence. So you're easily in a place where you could have like a 5-to-1 risk reward ratio, just buying common stock, not to mention how you want to think about the options trade. Because you think about some kind of like 25, let's say the 25 strike calls. If we get that move to 33, that gives them an intrinsic value of $8, not to mention whatever premium you're going to get. So you can kind of think about it that way, like what can you get those for, and how much, like what kind of percent return is that kind of thing. So I mean, the signs are pointing to bullish here, and this is the monthly chart of the S&P, or excuse me, the GDX versus S&P, and you can see this is the multiple time frame analysis aspect of it. Those lines I just drew for those annual bars, right, where every year was every candle was a year. This is the monthly version. You can see how we just you have these rallies in there, and these, you have this rally and then this decline, right? This is just swing high that starts a decline. Then you have this rally, this decline. This has been a very feeble rally. Like look at this robust rally. Look at this robust rally, and then we've had this rally. So that's a little concerning, isn't it? And this looks like a bear flag. So you really have to look at all of the evidence. Yet at the same time, if you go to the micro level, this is a bullish outside candle, right? You can see we broke below the low and now above the high, right? So that's also positive. So you've got a lot of cross currents. I'd say on the whole, it is bullish, and the risk reward setup is actually favorable for once, in a long time on the miners. And I have some videos on individual miners for silver. I'll see if I have time to do some individual gold miners to kind of see which ones might be kind of outperforming others. But I guess just really quickly, let's see. Let's look at gold versus. Let's look at GDX versus gold. We'll do Barrick. So this will be kind of a reverse thing. So this is telling us that Barrick Gold is underperforming GDX. So that's not good, right? That's not positive. What's another? GFI is probably outperforming, if I had to guess. And I'll see if I can do a full video on this. Yeah, so I mean, big pullback here, right? Like upper wick is always a big pullback. This is a monthly chart, and the quarterly is going to have a big wick as well. But you can see this thing had a pretty violent move down, and then it based for a long time, and then we've been rallying for quite a while. Really, since 2018, GFI has been outperforming. And so there are going to be other gems here, right, if you didn't want to play GDX itself specifically. But it does look like that is on its path to outperform the S&P. And if an individual miner is outperforming GDX, obviously it's going to even massively outperform the S&P. So that's going to be interesting. So we'll leave it at that for now. It's funny just to finally have some positive news for the miners. I mean, it's great.